this month we're going to talk about private markets. So because we have more and more demands, growing demand from the private investment actors to evaluate the impact of their investment on the environment, on climate, temperature, the impact on biodiversity. So because we have more and more demand, we wanted to make a dedicated webinar. And today I am with Leif, my colleague, who is a product owner at Iceberg Data Lab. Hi, Leif.
Hi, Tim.
Thank you for joining us. So today we'll talk about what we can provide for private investors, which kind of indicators, how do we calculate them, and what do we need from you, because when investments are non-listed, we need, of course, input from the investor to be able to calculate the indicators. So that's what we're going to talk about today. But very brief introduction about Iceberg for the people who join us for the first time today. Iceberg Data Lab, we are French independent environmental data provider. We are a startup. We were created only 5 years ago, and we pride ourselves to have a robust scientific methodology. Indeed, actually, our first clients are among researchers everywhere in the world who publish very interesting academic paper based on Iceberg Data Lab. So we are very recognized for our scientific methodology. We have a scientific committee, so we pride ourselves with the transparency we give on our methodology to our clients. And we'll be happy to discuss that with you if you want to know more about our methodology. It's not the goal today. We are able to calculate on the whole value chain, scope 1, scope 2, scope 3 impacts on the environment, and that's a very big point of our offering. So we have a very granular model which produces granular data with more than 2,300 goods and services produced and consumed in our model. And finally, we're a small company. We are very close to our clients, so we have very good client support, and we answer any query within 48 hours with a live stream, actually. So feel free to reach out to us for any question. So our offering is, on the one hand, climate, on the left-hand side of the screen, carbon footprint, temperature, what we call SB2A, so the alignment of a company with the 2 degree of the Paris Agreement. On climate, we produce, of course, the carbon footprint of a company. We have also the avoided emission, which is something that is really demanded, and transition and physical risk. The other pillar of our offering on the right-hand side in green is the biodiversity, the impact on biodiversity of your investment, with our main indicator being the CBF, Corporate Biodiversity Footprint. Same as the avoided emission, we have the positive contribution for biodiversity. Then we have scores, we have deforestation that arrive, but so plenty of indicators that we produce. And what can our client do with it? At the bottom of the screen, selection, finding the right investment for the portfolio, monitoring your environmental risk in your portfolio. Many clients use us for engagement, to engage and do stewardship with the companies they invest in. Or final use case, some banks or asset manager actually create ETFs or indices based on data. On the top of the screen is the regulatory world, of course, for producing sustainability reports, LEC 29 in France, SFDR, TNFD, of course, the nature reporting, or European taxonomy. That's why our clients come to us. So now let's move to private market and how Ideal Solutions serve our private clients.
Okay, thanks, Thomas. Yes, so I will start off with just 3 little introductory slides to show what IDL does generally and how maybe it can serve the private markets. And then afterwards, we're going to look into actually 2 very detailed examples where it's going to be even clearer. So first off, what are the general use cases that we want to enable. There's here 3 of the categories that Thomas already mentioned. Now maybe a little detail about how that's done. On the top left, you see that we provide 3 different types of signals. So for example, raw impacts would be something like just the amount of GHG emissions or the amount of land occupied, for example, for cattle grazing. Then we have the impact intensities that's already put in relation to the size of the revenue of the company. That's a little more high level, that's a little less in detail, a little less life cycle assessment approach, but already more comparative. And then the last one is the score. And the scores are used for very, very fast and intuitive screening, let's say. We're going to talk more about the scores later, but basically we provide scores from 1 to 6 typically, and then usually 1 being the best and 6 the worst. People can decide very easily what type of investment would be among, let's say, the least environmentally impactful or the most impactful. And what we can do with this, or if we just stay on this, what we can do with this, as we said, is screening, engagement, and reporting. I think for private markets, we're going to look especially into 2 things. It's going to be the screening, so that's not only on portfolio level, but that can also be on project level. If you want to invest into, for example, infrastructure, what will the impacts be? Is it something that aligns with your values, for example, or not? And on the other hand, reporting, of course, that's just, in the compliance sense, it's obligatory. There's a couple of regulations that everyone in the European Union has to adhere to, or even in other regions of the world. I didn't name all of them. It's a bit Eurocentric, but the list goes on, let's say. And on the other hand, also signaling. So, for example, if you know that your investments are actually at the very frontier of sustainability, then maybe you want to communicate about that, and you can also do that with the more comparative signals that we provide. And now the next slide is just a very quick peek on the data that's used. We're going to talk about it more later, but basically there's 2 ways we can do these assessments. One way is by directly looking at the physical quantities. So that is, for example, if you build, as I said, infrastructure, the steel that is used to build up that structure, or if it's a company that does, for example, food, then how much milk are they importing, etc. And the other one is, so that's number 2, that's excellent data quality, where we directly infer the environmental pressures from the materials. And the other one, good, is where you just provide us the revenues. And I think that's also very attractive because only based on the revenues in certain NAS sectors, we use the NAS system. So for example, 100 million revenue consulting is maybe not the most impactful example, but can also be dairy production in France. And based on this, we will infer with the economic model that we built, what are the impacts. To make clear why we do this or why we have this system, on the next slide, we're going to see the overall approach that Iceberg Data Lab has. So on the very left, you see the financial data. That's not crucial to the model. It's more to calculate these intensities that I talked about, so we can know the impact per sales or the impact per revenue. But then we have the next 2 bubbles. That's the revenue per sector. So that's the data level 3 that I talked about, and the physical flows, data level 2. And you can report at any level that is basically fit, or that maybe where the effort stands in a good relation to the result that it will get. And these data we will assess with 2 main sources, but actually it's dozens of sources. So there's the third-party data, which is environmental data, economic data from XIO-based from the World Bank, as you see. And we use that to kind of make up our economic model and infer the physical flows from revenues. So knowing from 100 million revenue in dairy production, this will be 50 tons of milk and 100 tons of yogurt, etc. And from the other side, There's the enrichment with reported data from our analyst team. So they are actually all sector experts, and they know exactly what are the necessary assumptions you have to make in each sector, so that the economic estimations that we make are actually valid, and also measures that come out of it.
Okay, so moving on from the methodology, now let's have a concrete use case of an impact assessment and signaling for real assets.
Thanks. So as I said, real asset that can be, for example, can be offices, that could be a power plant, for example, and in this case, we're going to look at how it works for a photovoltaic power plant. And the first thing that we would do in this case is collect some information. So for different categories that all help us to assess different aspects of this project. First one is general information, just to kind of be able to identify it, what is it, where is it, what's the capacity. Then we need to also know what's the type, or there's some information that only applies to certain types. So for example, if I have an offshore wind park, there's some information I need to know that's irrelevant for a solar power plant. Might be, for example, the depth at which these offshore wind parks are planted, etc., because this will have impacts on biodiversity as well. Then the life cycle, as I said, our model, even though it seems very, it seems to show the whole big picture, it is actually in the detail based on life cycle assessments. So all the little physical flows that are going on. And that's why for us, it's important to know, for example, how long the plant will be in function, because that is also being taken into account, and how the capacity might change over the years, if it's going to be added or not. The last thing, portfolio, it's not always crucial. So if you only assess a project to know if you want to invest or not, you can also skip that. But if you have a long list of investments, then you can give them different weights, so that after all you can know, okay, this whole bunch of investments, what's the overall impact, and that's why the weight of each one is most crucial. And then once we collected all this information, we're going to feed it into our model, and the model is then going to do its calculations. Of course, it takes a little while, and then what comes out are our different indicators. So as we already talked about, we have indicators of biodiversity, greenhouse gas emissions, and here I also mentioned the SB2A. So what temperature exactly? So what that means, that we assess not only, as I said, the raw emissions, but also, for example, if the emission intensity, so how much emissions are generated per, for example, kilowatt generated in this case, if this is more or less efficient than the industry average. And by that, we can tell whether an investment is aligned with the Paris Agreement or not, for example, to limit global warming to 2 degrees. And then what we'll also do is not only give you the absolute outcome, but also, if it's of interest, it can be differentiated by pressure, by scope, and in comparison with last year, the power plant next door, or also another industry.
Of course, to have some history on the data. That's why our client come to us as well.
Yeah.
So let's have an example.
Exactly. So what happens then if we get fed all this data and our machine produces the indicators? We're going to produce, specifically for infrastructure projects, we're going to produce a report that presents everything. We're not only going to produce a report, we're also going to make the data available in Excel form. But this here is definitely more illustrative. So we're seeing different categories here, and I want to just jump into some detail quickly. So for example, here we have GHG and CBF. So that means carbon emissions and biodiversity in more detail. For carbon emissions, for example, you'll see the total amount. You'll also see it broken down by scope. And on the top right is, or let's say top right, in the left part of the image, on the top right, can't be seen right now so clearly, but you also have the avoided emissions. So we will assess if this project is comparatively less impactful than other projects in the region, other projects in the sector. or if maybe it even improved over a year. And so we can assess not only compared to the sector or the region, but also take into account negative emissions. So there's ways for companies, it's not only carbon capture, but it's one of the ways to have negative emissions. And if a company invests in that, that can also be taken into account.
Okay, so for climate, we have carbon footprint and avoided emissions.
Yes. And on the right, it's the biodiversity. That's really, I think, what Iceberg Data Lab, or what set Iceberg Data Lab apart, especially in the beginning, because there was no real other offer, and especially not at this level of detail. So I already talked about pressures here and there. I think the pressure in climate is kind of obvious. It's just greenhouse gas emissions, but in biodiversity, it's much more delicate. And there's a lot of things going on in the model, but we're going to present on the surface the main impacts. And we're also going to talk about, for example, since we know the location, whether this site is maybe located close to a biodiversity sensitive zone, etc. Now, I want to look into some less, I mean, they were not completely obvious, but more intricate examples. So here we have the SB2A, as we talked about. And not surprising for a photovoltaic solar power plant, the projected temperature increase is 0.5 degrees. So that doesn't mean that this power plant alone can reach that, but it means that if the whole energy sector was made up by photovoltaic plants, then it would be on trajectory for 0.5 degrees. Of course, that depends on other sectors, that depends on other energy providers, but this project here is well aligned. And that's what we want to show with this.
Okay.
And here we go more in detail about the avoided emissions. Actually, yeah, a good thing that we have it in more detail. So there you see that it's over the years, over the region, and then also broken down into what is just based to efforts from this company, what's based on sector averages, etc. But yeah, I think that's clear. Here a little recap on what we provide, report with visuals plus an Excel, and that's basically it for project assessment. So as I said, this is specifically useful to screen in before if I should invest in a project or not. And afterwards, if the project is very beneficial to the environment, then we can report about it. And now what we're going to do is do a different example on portfolio level. We're going to go through it into the beginning. We're going to go through it a little faster because the process is quite similar. We're going to collect data again. Here it's more based on the activities of the company. And that's why we also have one more box. We don't start directly with the physical flows, we start with the revenue per sector per country. And that allows us, on the one hand, to the right, to produce the exact same indicators that we already have at project level, but also we can produce risk and dependency scores because we have an assessment on our own where we give scores to, for example, the transition risk. So that means how likely is it that changes in law in this region will affect maybe the profitability of the industry? So that's transition risks. There's also natural risks. So flood risk would be one of them. And this can be taken into account for these analyses. And then in this case, the applications, though, they're a little different. So first of all, I'm going to show how it's displayed. In this case, we don't just send a report, because if you want to analyze your portfolio, you might have 10, but you also might have 100 or 500 companies in it. And that's why we get access to the dashboard. So it's close, akin to a SaaS solution. You log in and you see all the data in one place. At the same time, the Excel exports are still possible, and you can also plug our API into your data analysis platform if you prefer to do so.
Indeed, so that's our front end, that's our web platform at Iceberg. We are a data company. We started, of course, just producing data and delivering it to clients. Now we have a whole web platform available for all our clients where you can visualize your portfolio and the different impacts, and you can export the data directly to your own systems.
So here we see a company view, and then, for example, in the next view, we will also see that you can have overview data for your whole portfolio with the weights applied, for example, that you reported, so that a company that's very impactful but where you maybe invested only a small amount will not screw up, if I can say so, your whole overall impact. Now, what are the applications of our signals, so our data that we produce here? We can start with biodiversity. As I said before, we produce scores as well, where we go a little less into detail about what's actually going on, and we just categorize companies into very impactful for the sector they're in. That's always important because we can't compare apples to oranges. Car manufacturer will always be more impactful than a tech company. That's why usually we compare within a sector. And here, for example, one easy method would be to say, okay, anybody who is in score 5 or 6, so the worst two classes, is not going to make it into my portfolio. That's a very easy application. And you can do the same for the climate trajectory that we talked about. Anybody who's not Paris aligned. So realistically today, let's say 2 degrees, 1.5. Might be a little complicated already. Anybody who's not aligned with that is not going to make it into my portfolio. So these are the more general use cases. And if you want to look at how this was actually used. So here we're not in private equity anymore. But as we said, that's a bit of a newer endeavor for us, and our established clients, as we call them, they're already using this data not only for screening, but also for the other end of my little use case diagram for reporting. So we already mentioned TNFD, SFDR, Article 29 is especially relevant here in France. And all the data points that we produce, they exist on a thematic scale. So if you want all the climate data points, you can get them as a package, but they also exist pre-selected to exactly respond to the SFDR requirements. Another example is, for example, that's actually exactly it. So here we see very directly what data points that are required in TNFD we already respond to today. And by the end of the year, that should be almost all of them. This, and then we also have a little overview of SFDR, if that's of interest, where we have very good coverage as well.
So 2 reporting frameworks where Iceberg can help. Perfect, thank you, Live.
Yeah.
That was very clear. So let's have a brief summary of what we offer. So for private debt and private equity, real assets, we understand that we need produce some data, issue level biodiversity and climate impacts, modeled and enriched by the data you provide. We don't need the entity names, of course, that might be important for if you have some secrecy about the investment, we can work with you, no problem. And we produce, of course, asset level biodiversity and climate impacts. For the input, we will need an Excel template per sector. And for the output, you will have the data through download or via the web access client platform. So let's move to the Q&A. Thank you, Live. That was very clear. And actually, there is everybody can ask. You can ask your questions in the Q&A or in the question tab. And we have one question that was okay on the power plant. When we talked about it, we talked about scope 1 and 2. Shouldn't we consider scope 3 because the PV power plant generates most emissions in scope 3 upstream? So actually, I will take the slide again. Okay, it was on that slide, I believe, where we see the temperature and scope 1 plus 2. We can see on the left indeed. So why not scope 3?
So generally, I just want to make clear. So we always compute for the for all the projects and the lines, the companies we assess, we always compute scope 1, 2, and 3. Also in this case, the specificity of this climate trajectory is that we take the trajectories. So that's you can see that as the carbon budget of the whole sector, and we take these from the IEA, who are the authority, I would say, globally for climate trajectories. And in the energy sector, the IEA considers only scope 1 and 2, because typically in the energy sector, almost all the emissions come from scope 1 and 2. So, for example, a company that burns coal, it's all about. And since on the sector level, it's still negligible, the scope 3 emissions of this photovoltaic plants, and we want to stay as close as possible to scientific consensus. We went with the scope 1 plus 2. So yeah, it's correct that scope 3 will be a little more precise, but for the sake of scientific, let's say, overall agreement, we go with what the IEA proposes.
Always this coming back to this scientific DNA of Iceberg Data Lab. Perfect. Do we have any other questions for today? Then that will be all for us. If you would like to have a discussion on your portfolio, on the next reporting obligation that you need to fulfill, please reach out to us. You will receive an email with the slides, of course, with the link to play. Feel free to share it. Feel free to come back to us, and we'll organize a dedicated meeting. Otherwise, you can reach out to us through our website, icebergdatalab.com, and there's a contact form. Let's be in touch soon. Thank you, Leif. Thank you very much. And we'll see you very soon for another webinar. Bye, everybody.
Bye-bye.